In the early months of 2024, something extraordinary happened in the global commodities market. It wasn't a stock market crash, and it wasn't an oil crisis. It was a silent, massive shift in the flow of one of the world's most ancient and essential metals, silver. Almost overnight, one nation began absorbing silver at a pace that stunned analysts and traders worldwide. That nation was India. We're not talking about a small uptick. We're talking about a literal doubling of imports to levels never seen before. The numbers are staggering. The pace was so intense that, on an annualized basis, it equated to over 7,000 tons of silver. To put that in perspective, that's a significant percentage of the entire world's annual silver mining output, all flowing into a single country. This wasn't a glitch. This was a massive, calculated accumulation that sent ripples through the global supply chain. But what triggered this silver tsunami? Was it a sudden speculative frenzy? A panic buy? The truth is far more interesting and rooted in cold, hard economic realities. It's a story of policy, industrial ambition, and the perfect alignment of two powerful catalysts. Today, we are going to peel back the layers and expose the real reasons behind India's historic 2024 silver rush. No hype, just the facts. Let's dive in. First, let's ground ourselves in the data. The headline is simple: India's silver imports doubled. But what does that practically mean? For years, India has been a major consumer of silver, largely for jewelry, silverware, and investment. It's deeply ingrained in the culture, but the volumes we saw in early 2024 were in a completely different stratosphere. Imagine the typical flow of silver into the country as a steady river. In early 2024, the river turned into a roaring flood. This wasn't a gradual buildup. It was sharp, sudden, and immense. Traders in London, Zurich, and Shanghai, the hubs of the global bullion trade, watched as inventory was rapidly secured and shipped to Indian ports. The physical market tightened visibly. Warehouses that store silver saw their stockpiles drawn down to meet this insatiable new demand from the subcontinent. This was a market-moving event of the highest order, one that demanded an explanation. What could possibly cause a nation of 1.4 billion people to suddenly need twice as much silver as it did just a few months prior? The answer lies in a powerful two-part combination. The first major catalyst was a classic economic lever, a change in tax policy. In its mission to manage the economy and trade balances, the Indian government periodically adjusts import duties, taxes levied on goods brought into the country from abroad. In early 2024, a decision was made to significantly cut the import duty on silver. Now, why is this such a big deal? Silver, like gold, is a highly price-sensitive commodity in India. A large portion of the demand comes from price-conscious buyers, investors looking for a store of value, families buying jewelry for weddings or festivals, and artisans who craft silverware. When the government slashes the import tax, the landed cost of silver, the final price a buyer pays to get the metal into the country, drops immediately. Think of it like a massive nationwide sale. Suddenly, silver became significantly cheaper for domestic buyers compared to international prices. This created an enormous arbitrage opportunity. Importers knew that demand would surge at these lower prices, so they rushed to book orders and bring in as much metal as possible to capitalize on the favorable tax regime. For the average Indian investor, silver, often called the poor man's gold, became an even more attractive proposition. The lower price point made it accessible to a wider segment of the population looking to hedge against inflation or simply own a precious asset. Jewelry fabricators and silverware manufacturers also seized the moment, restocking their inventories at a lower cost in anticipation of future sales. The duty cut acted as the initial spark, opening the floodgates for pent-up demand that had been waiting for a better price point. But this was only half the story. The duty cut explained the timing and the initial rush, but it didn't fully explain the sheer scale and the industrial nature of the buying. For that, we need to look at the second, more structural catalyst. While the duty cut lowered the barrier, the second catalyst provided a massive, sustained pull for silver that had nothing to do with jewelry or traditional investment. It has everything to do with the future of energy, solar power. India is in the midst of one of the most ambitious renewable energy expansions in human history. The country has set colossal targets for solar energy generation to power its growing economy and reduce its reliance on fossil fuels. This isn't just a plan on paper, it is visible on the ground in the form of gigantic solar parks spanning thousands of acres across states like Rajasthan, Gujarat, and Tamil Nadu. So, what does this have to do with silver? Everything. Silver is the single most electrically conductive metal on the periodic table. This unique property makes it absolutely indispensable in the manufacturing of photovoltaic, PV, solar cells, the building blocks of solar panels. If you look closely at a solar panel, you'll see a grid of thin metallic lines on the surface of each cell. Those lines are made of silver paste. Their job is to collect the electrons generated when sunlight hits the silicon cell and transport them out of the panel as usable electricity. Without silver, the efficiency of a solar panel plummets. It is the superhighway for the electricity generated by the sun. As India's domestic solar manufacturing industry ramped up to meet its national targets, the demand for silver paste exploded. Gigafactories are being built to produce solar modules domestically, and every single one of them needs a reliable, massive supply of silver. This is not cyclical demand that rises and falls with the seasons. This is structural demand, driven by a long-term national imperative. So, in early 2024, these two powerful forces converged. You had a significant drop in the import tax, making silver cheaper for everyone, which incentivized massive restocking by jewelers and investors. At the exact same moment, you had an industrial juggernaut on the solar sector, throttling up its demand for silver to build out the country's energy infrastructure. It was the perfect storm. The duty cut acted as the accelerant, and the solar boom was the massive pile of fuel. The combination created a vacuum effect, sucking silver out of the global market and into India at an unprecedented rate. Importers weren't just buying for the next month, they were buying for the next year, securing supplies at a favorable price for a future where demand was guaranteed to be higher. This forward-looking buying, combined with immediate consumption, is what pushed the import figures to that mind-bending 7,000-ton annualized pace. The world took notice. Prices in the global market began to firm up as the physical market tightened. The India effect became a primary topic of discussion in trading pits and boardrooms. It was a clear signal that the dynamics of the silver market were changing. No longer just a precious metal for adornment and investment, silver was asserting its role as a critical industrial metal for the 21st century. And India was leading the charge. We've established the what and the why of the surge, but the logistics of moving 7,000 tons of precious metal across the globe are mind-boggling. Now, we are going to trace the journey of this silver and explore the intricate machinery of the global supply chain that made this historic transfer of wealth possible. To satisfy India's sudden gargantuan appetite, silver had to be sourced from every corner of the globe. Silver mining is a global industry, but a few key players dominate supply. The world's primary silver producers are concentrated in the Americas and Asia. Mexico has long been the undisputed king of silver production, home to vast, rich deposits that have been mined for centuries. Peru is another South American powerhouse, consistently ranking among the top producers. Across the Pacific, China is a massive producer, though much of its output is consumed domestically. Other significant sources include Chile, Poland, Australia, and Russia. It's important to note that a large portion of the world's silver, about 70%, is produced as a byproduct of mining other metals like copper, lead, zinc, and gold. This means silver supply is often tied to the economics of these other base metals. You can't just flip a switch and dramatically increase silver production overnight. It requires ramping up massive, complex mining operations across the board. When India's demand spiked, international bullion banks and trading houses scrambled to secure supplies from these primary sources. They also tapped into existing above-ground stockpiles held in vaults in London, Zurich, and New York. The global network of refineries, which take the raw mined product and refine it into 99.9% pure London good delivery bars, had to work overtime to meet the shipping schedules. Once the silver is refined into standard 1,000-ounce bars, the industry standard for wholesale trade, the logistical challenge begins. Moving 7,000 tons of silver isn't like shipping consumer electronics. This is high-value, heavy cargo that requires extreme security at every step. The bars are loaded onto armored transports and taken to secure air cargo facilities or shipping ports. While some high-priority shipments fly, the vast majority of this volume travels by sea in secure containers aboard massive cargo ships. The journey from a port in Mexico or Peru to a port in India like Mumbai or Chennai can take weeks. During this time, the metal is insured and tracked relentlessly. Upon arrival in India, it must clear customs, where that lower import duty is applied, before being moved into domestic vaults. From there, it is distributed through a network of bullion dealers to the end users, the jewelry manufacturers in cities like Jaipur and Kolkata, the investment banks in Mumbai, and increasingly the solar panel factories springing up in industrial zones across the country. The sheer volume of silver entering Indian ports in early 2024 created a palpable buzz. Logistics companies, secure transport firms, and vault operators were operating at peak capacity to handle the influx. It was a physical manifestation of the statistical surge we saw on the charts. Now, let's refocus on the most dynamic driver of this demand, the solar industry. Why is silver so critical? Could they not use something cheaper like copper or aluminum? The answer lies in basic physics. As we mentioned, silver is the best conductor of electricity at room temperature of all the elements. In a solar cell, the goal is to convert as much sunlight into electricity as possible, and then get that electricity out of the panel with minimal loss. When sunlight hits the silicon semiconductor material in a solar cell, it knocks electrons loose, creating an electric current. This is the photovoltaic effect. But these electrons need a path to flow out of the cell to be usable. That's where the silver comes in. A paste containing fine silver powder is screen printed onto the surface of the solar cell in a grid pattern. This paste is then fired at high temperatures to form solid metallic lines. These silver lines act as the collection grid. Because of silver's incredibly low electrical resistance, it can gather these electrons efficiently and transport them out of the module without significant energy loss as heat. Using a less conductive metal would mean losing more of that precious solar-generated electricity before it ever leaves the panel, making the entire system less efficient. In the highly competitive solar industry, where every fraction of a percent of efficiency matters, silver's performance is unmatched. While the industry is constantly trying to thrift, to use less silver per cell to cut costs, the sheer volume of new solar panel production is outpacing these efficiency gains. The net result is a massive and growing need for the white metal. While solar is the headline grabber, it is important to remember that India's industrial modernization is steadily increasing silver demand across a whole spectrum of technologies. Silver is the unsung workhorse of the modern electronics world. It's found in the countless electrical contacts and switches in our homes and offices, ensuring reliable connections. It's a key component in the multi-layer ceramic capacitors found in virtually every electronic device, from smartphones to laptops. The rollout of 5G networks requires silver for its infrastructure. The electric vehicle, EV, revolution is another major driver. EVs use significantly more silver than traditional internal combustion engine cars, primarily in their complex electrical management systems, connectors, and circuit boards. As India pushes for greater EV adoption, this sector's demand will only grow. Even in the medical field, silver is prized for its natural antimicrobial properties, used in everything from wound dressings to coating surgical instruments. What we were seeing in early 2024 was not just a jewelry restocking event or a solar spike, it was the reflection of an economy that is rapidly industrializing and digitizing. Silver is a critical material for that entire process. The duty cut may have opened the door, but the industrial needs of a 21st century economy are what's pulling the metal through. And we must never forget the bedrock of Indian silver demand, its cultural and investment significance. For centuries, silver has been a store of wealth for millions of Indian households. It is gifted at weddings, bought during auspicious festivals like Dhanteras and Diwali, and passed down through generations. The duty cut in early 2024 acted as a powerful psychological trigger for this segment. For a price-sensitive populace, a drop in the tax component was effectively a discount on wealth accumulation. Farmers who had a good harvest, urban workers looking to save, and families planning for future events all saw an opportunity to buy more silver for their rupee. This isn't just about adornment, it's a form of financial security. In many rural areas, where access to formal banking can be limited, silver and gold remain the primary savings vehicles. The surge in imports was, in part, a massive collective act of saving and wealth preservation by the Indian people, facilitated by a favorable government policy. So, you have this powerful triad: a government policy creating a price advantage, a booming new industrial sector in solar creating structural demand, and a deep-seated cultural affinity creating a massive base of consumer demand. Now, we step back to look at the bigger picture. An event of this scale is a seismic shock to the global commodities system. The most immediate and tangible impact of India's buying spree was felt in the world's silver vaults. For years, the global silver market operated with a comfortable buffer of above-ground stocks. However, even before 2024, these inventories had been on a steady decline. Years of structural supply deficits, where the world consumes more silver than it mines, had been slowly eating away at these stockpiles. India's sudden massive demand acted like a giant vacuum cleaner, accelerating this trend. Market watchers observed a notable drawdown in stocks held by the London Bullion Market Association, the world's primary physical trade hub. Similarly, eligible silver inventories at the COMEX in New York saw reductions. This isn't reason for immediate panic. There is still silver in the vaults, but it is a clear signal that the market is tightening. The buffer is getting thinner. When a single buyer steps in and demands a quantity equal to more than 25% of annual global mine supply, that metal has to come from somewhere. Since mines can't just ramp up production instantly, it must come from existing stocks. The 2024 Indian surge was a stark reminder that these above-ground stocks are not infinite. They are finite, and they are being drawn down by the voracious appetite of the new industrial economy. Economics 101 tells us that when demand explodes and supply is relatively fixed, prices must rise. And indeed, the Indian import surge provided a strong tailwind for global silver prices. While silver prices are influenced by many factors, including interest rates, the strength of the US dollar, and general market sentiment, the physical tightness caused by India's buying put a solid floor under the market. It created a buy-the-dip mentality among traders, who knew there was a massive real-world buyer ready to scoop up metal at lower prices. The psychological impact was just as important as the physical one. The news of record Indian imports acted as a massive vote of confidence in silver. It signaled to the rest of the world that silver was in high demand, not just as a speculative asset, but as a crucial industrial material. This encouraged other investors and industrial users to secure their own positions, further adding to the upward pressure on prices. The India story became a dominant narrative in the precious metals market, influencing trading strategies from Wall Street to Shanghai. The multi-billion-dollar question now is, was this a one-off event, or is this the new normal? Can India continue to import silver at a pace of 7,000 tons per year? It's unlikely that this exact frantic pace will be sustained month after month indefinitely. The initial surge was partly a restocking event triggered by the sudden duty cut. Once inventories are rebuilt and the initial pent-up demand is satisfied, the pace might moderate slightly. Furthermore, higher silver prices themselves act as a natural brake. As silver becomes more expensive, jewelry demand becomes more sensitive, and industrial users are incentivized to find ways to use less of it. There's also always the possibility of future policy changes. However, the underlying structural drivers are not going away. India's commitment to solar energy is long-term. The factories building solar panels are being built right now, and they will need silver for decades to come. The country's overall economic growth and industrialization are on a secular upward trend, which means more demand for electronics, EVs, and infrastructure, all of which use silver. So, while the 7,000-ton annualized figure might be a high watermark reflective of a unique confluence of events, the baseline demand from India has almost certainly shifted permanently higher. The floor has been raised. A key variable in this future outlook is technological innovation. The solar industry is acutely aware of its reliance on silver and the risks of rising prices. For years, scientists and engineers have been working on thrifting, finding ways to make solar cells more efficient while using less silver paste. They have been successful to a degree. The amount of silver used per watt of solar energy generated has decreased significantly over the last decade. However, there is a physical limit to how much silver you can remove before performance suffers. More importantly, the sheer volume of solar installation growth is vastly outpacing these per unit savings. Even if you use 10% less silver per panel, if you are installing 50% more panels every year, your total silver consumption is still going way up. It's a race between volume growth and efficiency gains, and right now, volume is winning hands down. For the foreseeable future, the green energy transition remains powered by silver. The great Indian silver surge of early 2024 was more than just a blip on a trading screen. It was a revealing flashpoint that illuminated the new reality of the global silver market. It showed us the immense power of policy to move markets. It demonstrated the unbreakable link between our green energy future and this ancient metal. And it highlighted the sheer scale of India's growing economic influence on the world stage. Silver is no longer just a relic of monetary history or a material for silverware. It is a critical, strategic industrial metal that is essential for the technologies that will define the 21st century. The events of 2024 proved that when a major economy like India throttles up its demand for this finite resource, the entire world feels the impact. As inventories tighten and industrial demand continues to set new records, the dynamics that led to the silver rush of 2024 are not disappearing. They are the fundamental forces that will shape the market for years to come. The silver tsunami may have started in India, but its waves are being felt all over the world. Thank you for joining us on this deep dive. If you found this analysis valuable, please like and subscribe for more in-depth reports on the forces shaping our global economy. Until next time.